Everyone, and Double P here, and welcome. So, in today's trading session, it is Monday, December the 5th. And this morning, this is the end of the day trading recap for my Platinum X Power Option Trader members. So, this morning, I attacked the SPY once again. So, a lot of you, I got a lot of support tickets over the weekend. They're asking me why I'm always trading the SPY. Well, first and foremost, it's my capital. I'm doing live trading. So I'm looking at the positions that I want to trade. And I've been doing this long enough to know now where the volatility is, where the price action is, where the liquidity is, where the volatility, where everything is. So, and when you become a really good option trader, the part of the battle, part of the methodology is that you need to be able to not trade every single stock or equity or ETF out there, because that's what newbies do. When you get into this business, I'm going to give you some experience, battle-tested experience. What you want to do is you want to focus in on a dozen or so instruments, i.e. ETFs, equities, futures products, whatever the situation is. You want to focus in on a dozen of those. You want to watch them religiously, and then you want to drill down and start to pick literally a handful, which is like 5 or less positions, equities, ETFs, stocks, whatever, and follow them so that you live, eat, breathe, sleep, shit that stuff every day. You know how it moves. You know what the liquidity is like. You know what's going on when it's a bear market, bull market, sideways market. You know how to trade it. So to answer your question, that's why I trade the SPY. And if you follow my trades, you don't have to, but I'm sending the trades out because that's what you're paying me for. You'll become very profitable, right? So this morning, what do we do? So let's get into this first. So let's see here. Let's get back over here to the chart. So let's get into this. So there's my account right there, real account. I got to blur out the my account information, obviously, so I don't violate my terms of service, my brokerage. There's the date, and here it is, real-time data. Let's come over here. Stock is in real time. Amex, New York Stock Exchange, NASDAQ, all real-time feeds. Give me a second here. Got a frog in my throat. Equity options, real-time. Futures options, all real-time. Forex, real-time. Other real-time. So real-time count, real-time trading. Let me come over here. I got to knock this out again because this memory's getting chewed up. So what do we do? What do we do? What's the first thing we always do? I always tell you, draw the box. Why do you draw the box? Because the box is price action. The box is volatility. The box is volume. The box is support and resistance. When you understand and draw the box, you know what goes on. When the stock or ETF or security or instrument opens up under the box, we take a short position. Opens up above the box, we take a long position. Opens up inside of the box, we wait. We can either do spreads or we wait, try to trade through it. If you feel, as you're looking at the moving averages, where it's going to go, or you don't take the trade, you wait. So what did I do? Well, where did the stock open up? Right here, right? Or sorry, the ETF, right? So I'm taking a short position, but I'm waiting to take my short position, right? Because I'm just looking at the setup and I want to make sure the setup is just and wise before I take it and send it out. Because once again, you guys are paying me money. All right, so let's look at this. So as you can see here, I'm on a 1 minute candle. Let's go over here to What did I send out? I sent out the December 7th, 2022 403 strike put for 166. You see it right here. It's at 230 right now. 95%. So before it was not, it was at 166. So it was trading right around what the 400s or the 401s are trading for, basically. Right? So we look at everything, right? What's the volatility? You come over here, the volatility. The volatility right here is a 19 vol. Very low vol, which means it's moving very sluggishly. Plus or minus $4.99, basically $5 move. It's already moved $3.85 today, right? The market makers are saying it's supposed to move $2 today, right? But it's already moved. The true move is $3.77. You can see it right there. So it's got another $1. It's got another $2 to move either here nor there today, throughout the course of the day, right? I should actually probably take this trade again, but I'm not going to take this trade. I'm done for today. So I send out the trade at 9:45. Let's have a look at it. 9:45. There we go. At 9:45, let's have a look. There's our movement, right? Why did I take it at 9:45? Well, count back 3 candles on a 1 minute. Those are three red soldiers to the downside right here. Spinning top and 3 soldiers right here, red soldiers. Here's the 20 is green. 20 turned yellow, which means it's going down. There's my movement. There's the bands. The bands are sloping in. The band is sloping up to go down, touching to the downside. 9:45. There's the movement, right? There's some consolidation right there. There's absolutely no reason for you to be getting stopped out of that trade if you took my trade today. There's no reason for it because you know what consolidation is. You wait. And then the rest is history right here. Boom. Look at that, right? Beautiful movements, right? Beautiful, beautiful. That's a trade, right? That's the pocket. Right, so I took some positions today, some big positions, as I always do. So let's come over here. Let's see what I did. So 406 put, 23,000, and then 403 put, which is what I sent out to you guys, and I took 9,700. So for today, 32,989.30. Not a bad way to start off a Monday, but that's what happens when you take big positions, right? I have I have a big account, so I can take a big position. You don't need to take a big position, right? The trade I sent out to you was 10 contracts, right? So, let's do the math on 10 contracts. I told you to take 10 contracts at 403 at 166. Times 10 contracts times 100 shares, because that's what every contract is 100 shares. That's $1,600 that you would have put out into the marketplace. So I told you I got out plus 20%, which I actually got out more than 20%, but I sent it out early for you guys at 20%, and I stayed in the trade. So we go, let's see here, 2 times 10 times 100. So you guys would have made 1 0.0660. For you, that was a good $340 on the trade. Now, you can see when you do volume, right? 246, the stock is still I should actually, ETF is still now, see, I missed that big move as I'm doing this end of the day recap. I should have took that. Now we're at 247, but I'm good. I'm done for the day. That was a good movement. That was a good move. You can stay in this position. If I was to continue trading, I would stay in this position. Why would I stay in this position? Because here's a 200 pushing down hard. The 200 is the red right there. There's the bands right there. There's the median. There's the 20. It's just turned right there. You can see the yellow right there. You can see here on the ES, I would stay in this position. This could be possibly a day trade, maybe not a day trade, maybe a half a day trade, because in the afternoon it may bounce. Where are we at right now? Well, let's come over here to the advanced decline line. So you see the advanced decline line is literally for every 7 stocks up, 1 is down. Or is that right, the math? Yeah, about that. Yeah, 7 to 1. So it's right. The decline is 22.16. Advance 5.94. Right. Let's look at the heat map. If you don't know how to look at the heat map, well, you come over here to Market Watch and go over to Visualize. And then there you see the sea of red. And you see my system is popping off, telling me what's going on. Big option block trades are getting in. But I'm done trading for today, right? So what else do we do here? We go over and we look at the Market Watch heat map, go through the index watch. We don't go over finance, we go over visualize, and we come down here. So we do the checklist, which is what I do every time, every day. Come over here, public, we go to futures. So you see what's going on with futures, decline advance, 59.18. Come over here and you go to NASDAQ 100. This is my daily checklist, right? 94.8, you see it right there, advance decline, decline advance, right? Sea of red, right? We come over here and we come down here to the Russell 3000, right? You wait for that to populate. And you see 22 decline to 344. And then we come over here to the Russell. All right, we go to the S&P. This is the checklist. This may be boring to you, but this is the methodology. This is the foundation. This is what helps you get profitable. If you don't do this, I mean, what more can I help you do if you don't want to follow the methodology and the foundation and the checklist, right? This is all before I do my trades, right? I look at the checklist. S&P 100, 91.10 decline advance. I mean, this tells you the pockets. This tells you what's going on with the marketplace. Why would you ignore all this data, right? Go to the S&P 500 and then you see it, 453 to 45, right? Or 46, decline advance, right? This tells you what's going on, right? I mean, why would you want to fight this marketplace? Why would you want to go long when the market's tanking, going short, right? And we're in a bear market, right? So look at this. I could come back here and take this trade again, but because of the volatility is sucked out of this marketplace, let me come over here and let me look at the vol here. Not a lot of volume. So first of all, not a lot of volume here on the ES. So it's only 500,000 contracts. I mean, it's $4,000 product, right? But still, it's only less than 500,000 contracts. So I mean, 11 days out. That is not what I would like to see. Not a lot of vol. And there you see why the market is moving so slow. 13% vol. implied volatility. It's supposed to move plus or minus $22 today. And what's it moved? It's moved $43 today. All right, so it's went twice its expected move. All right, so no vol in the marketplace. Volatility is being collapsed out of the marketplace. Let's have a look at it. Where's the VIX? The VIX is down here at a 20. Yeah, so VIX is collapsed. Transportation, everything's down. Energy is down. Let's look at energy. Yeah, so I'm good. I'm not trading anymore because the volatility is sucked out of the marketplace right now, and it's really a slow grind. So I'd rather just wait. I'd rather wait for the vol to pick. I'd rather wait for the vol to pick back up, and then for me to be able to look at taking a position here. So do 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 do. And my screen is slowing down quite a bit here. All right, so that's it from Double P. Hope you took the trade today. Hope you were profitable. I'll see you guys in the next trading session. And once again, what should you be looking at? Well, you should be looking at global news, right? So you want to see what's going on with global news. I've told you that before. And that'll help you out with your trades. All right, so that's it for me, Double P, over and out. I'll see you in the next trading session. Take care, everybody.